The gold and silver train knows no stopping. We're trading over $4,100 an ounce in gold. Silver was at $53 earlier this morning. It is now closer to $51. Mr. Slammy, I showed up again in the market this morning, and I'm starting to believe that this gentleman lives in London because it all happened around 8 a.m. my time, and it was quite obvious that somebody must have entered the office and hit the sell button. Lots of pressure on gold and silver this morning, but it was bought. So we need to discuss what is happening in the gold and silver markets, but I also would like to dissect and understand and discuss the fundamentals behind the gold price move. I've invited a fantastic guest to discuss this. It's Egon von Greyerz. He's the founder and managing director over at von Greyerz Gold, and I'm really looking forward to hearing his insights. Before I switch over to my guest, though, hit that like and subscribe button. It helps us out tremendously, invite fantastic guests like Egon onto the program, and we much appreciate it. Thank you so much for doing that. Now, Egon, it is great to have you back on the program. Exciting times we live in, don't we?
Certainly is, Kai. And, I'm an old fox in this game. I didn't start my life in financial markets directly or in gold, of course. And that was something that I started at the end of the 90s. And for the simple reason, I've been in banking, I've been in corporate life in the UK. But then I decided that the world was going to be in a mess, and it was the right time to start thinking about wealth preservation. And of course, gold was no better instrument, was the best instrument there is for wealth preservation, clearly. Therefore, we focused on going into the gold market in a major way, and we entered it to 2002 at $300. And we recommended at the time to our investors and for ourselves also at least 50% of financial assets. So here we are now, about 3,000, or what are we? 3,700.
4,100 something. It's
$4,000 later, yeah. Almost.
Almost. Okay.
From the 300 where we enter the market in a bigger way. So, you talk about this fluctuation this morning. To be honest with you, I don't care the slightest bit about fluctuations. I have from the beginning been absolutely certain that we are at the end of a monetary era, and therefore the currencies will be destroyed. And since we measure gold in currencies that are dying, then it's easy, of course, because the gold price always goes up. I mean, it's totally wrong to measure gold really in fiat money, because it would be better to measure it in chickens or cows instead, because at least they have a more stable value than the currencies. So we are at the end of a monetary era, and they always end badly. And as you know, the currency has gone down by 99% since 71 when Nixon closed the gold window. So we got 1% left to totally take them down to zero. And that will happen. But remember that zero is 100% from here. That last percent is 100% from here. That means that, there's a long way to go and a lot's going to happen. And it will be absolutely horrible times for the world. We're always told our investors, don't wish for the gold price to go up, because the quality of your life is not going to be the same when the gold price goes up dramatically. And that's the period we're entering now. We're into the acceleration period of the precious metals, and of course the collapse era for currencies. So that will lead to quite a horrible world.
No, we will dissect that exactly. We can get more granular on those topics, because I did want to ask you about the relationship of gold and fiat currency. So as you said, we're in the acceleration phase, and it starts and I was going to ask you, the US dollar is actually doing much better than the other currencies right now. If you look at it on a daily basis, the Dixie is doing okay. But I was going to ask you, the relationship between gold and currencies and fiat currencies, it seems like, broken is the wrong term, but it seems like gold is accelerating much faster now than it maybe the dollar and other currencies are declining. Or is it just playing catch up? And what is your opinion on that?
Well, yes, as I said, we are now entering the exponential phase of the metals for the simple reason that the world economy, and especially the Western economy, is now collapsing. And so you get this phase at the end when things go a lot faster. Currencies is no use comparing on is the dollar stronger or is the euro stronger or the yen. It doesn't matter. They're all absolutely rubbish. They all go to zero. So therefore, we have to have other ways of looking at gold and silver, of course. And the way we look at it is ounces or kilos or and grams or whatever level you're investing at. That's the only way to look at it. To measure your wealth every day, if you have gold and silver in dollars, is totally useless. Totally useless. Look at the prices now, right? We don't. It's not. People think, and that's because that's what governments tell them. People think that prices are going up. They aren't going up at all. It's the value of the currency, and of course, as you said, why is it going up now? Well, first of all, the money supply has been increasing rapidly for well, 50 years, let's say, and certainly in this century. And gold hasn't kept pace with that. And that's happening now. And of course, now gold is also forecasting that there will be in the next 5 years, maybe more, 10 years, unlimited money printing to try to save this world. And sadly, that is going to fail. But that is the consequence of the levels of debt we have now and the bond market. It's not going to be possible to finance the deficits that we're going to see in the future. And therefore, interest rates will go up dramatically. And interest rates also has to obviously reflect the risk of default. And the risk of default is going to increase by the day because we will see failures in corporate markets, we'll see failures in government markets. And obviously, we will see massive failures in the banking world. And that's why, I said for years that the governments are not going to be, or central banks, to be able to control the currency, the rates, the interest rates. And they will try with a shorter term, but it's going to fail. The market, and led by the longer rates, will just sell off. The bond market will sell off, which means that the interest rates are going to go up and up and up. And I came to the UK in the early 1970s, and I saw inflation during 7-year period being an average about 15%, 15%. I saw my first mortgage in 1973, the interest on that went up to 21%. 21%. How many people today, Kai, can afford a 21% mortgage rate? Nobody. Nobody. No. And whether we will go to that level or not, I wouldn't be surprised. We will certainly go up in the teens. And of course, so there won't be, people will not have money to pay for the mortgage or pay for the debts or interest on their debt. And that's so the government will have to print unlimited amounts of money to help them. And this is how you get the cycle of higher rates, higher inflation, and collapsing currencies. It's so simple. Remember, we decided to go into this 40 years ago to gold. We went in actually in the early 2000s because we waited for the gold to bottom out, and we were lucky to pick it up almost at the bottom. And since then, I've never worried one day. I never had to look at the price of gold. We didn't go into silver heavily or at all, actually, in the beginning. Then we went in a bit when we thought the timing was right. And silver now, of course, I'm sure we'll talk about that, is going to go up faster than gold. But for wealth preservation, gold is the right metal to hold. And gold is still going to go up, in my view, by multiples from here, reflecting all of the problems that we will see in the economy. And as we say, I think gold normally keeps pace with the cost of living and the purchasing power. I think now gold is going to go much faster than purchasing power, for the simple reason that nobody owns gold today. We've had about 0.5% of world financial assets in gold. That is now going to change dramatically, and not just temporarily. There'll be a fundamental and permanent change in the way that people look at gold. And that's what people have to take into account now. This is not a speculative move, catching a few $100s on the gold price or a few tens of dollars on the silver price. This is much, much more fundamental. And until people realize that, they're going to, investors, I'm talking about especially, they're going to see the total destruction of their investments, because we'll have a massive wealth transfer from paper assets to real assets in coming years.
If gold were the doomsday clock and the gold price was the doomsday clock, how close to midnight are we here now, Egon? Because especially the pace of the gold and silver price moving higher now versus other fiat currencies has me concerned. The question is, how much room is there until it's midnight?
Midnight can be defined in many ways, Kai. You mean midnight end of the world, or do you mean midnight when we reach maximum gold price, or what do you?
Good question, midnight? Actually. So good feedback. Midnight is like when the fiat currencies fail. So how much room is left? And it's very difficult, of course, to gauge, because once momentum kicks in, and you already touched on restructuring portfolios and assets, but how close to midnight are we of fiat currencies failing? Maybe that's the better question to ask there, Egon.
Well, anything that's gone down by 99% is pretty close to midnight. And therefore, we are very close. But it's the final phase, which is the dramatic one, of course. This has been a gradual move. This is we're back to old Hemingway, aren't we? How do you go bankrupt? First gradually, and then suddenly. And that's the phase we're entering now. We have seen a gradual phase of since 1971 of the destruction or fall of fiat currencies. And now we're going to see the sudden phase. So it's going to go a lot quicker than it has done, which means that gold and silver will go up faster, currencies will consequently lose value faster, and inflation will rise, and governments will tell you that it's just inflation rather than a total mismanagement of the economy by just allowing budget deficits and therefore printing money in order to cover them. I mean, it's an absolute scandal what's happened. But at the same time as it's a scandal, it happens time and time through history. So these governments, who are absolutely useless in most countries, are no worse than previous governments, especially at the end of eras like this. We are at the end of a monetary era, and that's a very ugly period in the economy, ugly period for interest rates, for stock markets, and for people also. And this is going to be a very, very tough time for everyone. No one can escape the problems that the world will see in the next, whether it's 5 years or 10 years. I think we're accelerating. I doubt it's going to be as much as 10 years. Of course, markets and the financial system and political system can collapse, and stock market goes down straight away, like it did in let's say 29 to 32, very quickly. But then it takes 50 years before it recovers. I mean, that's what happened to the Dow, for example, going down from 400 to 40, and not in 29, 32, and not going back to the 400 level until 1956. Or 55, 56. So so therefore the economy can stay weak for a very long time. I learned, think, that forecasting is a mug's game, and to forecast price and time is virtually impossible. I focus more on risk and direction. I know that the risk is higher than ever now during the life I have lived, and during the last 50, 70, 80 years. And therefore, you focus on protecting that risk, and then if you are not totally stupid, that the direction is going to be obviously down in currencies, down in stock markets, up in interest rates, etc. And sadly, down in quality of life, down in world population, for example. That's inevitable in an era like this. So there will be a lot of changes and a lot of suffering in the world. And I think, so therefore, there's no use saying, well, what's going to gold price be at the end of the year, or what's going to be next year? I don't give a damn about that. Worry more about protecting yourself, protecting your family, helping friends, etc. Don't worry about what the gold price is going to do. The gold price is just the effect of the normal mismanagement of the economy that happens at the end of every monetary era. Neil Howe calls it the fourth turning. We wrote about I wrote an article in 2009 called "The Dark Years Are Here," when I actually mentioned I wasn't influenced by Neil Howe, but my thoughts were similar to his, that we are at the end of an era, and it's as simple as that. So no use trying to forecast markets or trade in and out. You buy gold and silver to protect yourselves. That's the only real wealth preservation there is. If you buy physical, hold it outside the banking system, like we help people to do. But if you everything else is speculation. Everything in the financial markets is speculation. Yes, real assets are going to go up a lot, and gold and silver stocks are undervalued compared to gold and silver. The only problem is that they are in the financial system. You do not know at the end if you will actually get a hold of your shares that you hold. So therefore, from our point of view, we are actually pure wealth preservationists. We are happy for our clients to stick to the physical gold and silver rather than going to paper assets, although we see much more potential, of course, in the gold and silver stocks than in the physical, because they've lagged behind dramatically. But nevertheless, if you play in those markets, that should be with much smaller amounts than the physical you hold, of course, in our view.
You make some really interesting points, and I've got a couple follow-up questions, of course, here, Egon. Maybe first one is, what happens when the clock strikes midnight? And that's I'm really concerned about that, because a lot of people talk about that happening, but what does midnight plus 1 minute or so look like once we're at that point? I'm trying to understand, like, what role will gold have moving forward, and what does the quality of life that you've referred to sort of look like? Yes, it'll be worse, but how can we sort of interpret that?
Yes, let's remember that it doesn't happen all at once. Various sectors of the market are affected at different times. You can have a massive, let's say you have a failure in the banking system. That doesn't affect people straight away, except for the people who have money, or let's say not all banks will fail at once. But the ones that fail obviously means that people who have money in the bank will not be able to get to their money. And the same, you take in the Weimar Republic, politics was in a total mess, and there were political figures that were murdered time and time again, and we haven't seen much of that yet, but I'm sure that's going to be more and more of that, because people will be generally unhappy, and they will find some culprit that they can blame for that. So there will be those kind of political murders. There will be, I wrote this many years ago, there will be change of leadership, and very few presidents or prime ministers or chancellors will sit to the end of their period, because there will be votes of no confidence. People will be ousted, although they're elected for a period, because in general times are going to be so bad that nobody can stay in power for the full period. So I see a political system which is in a total mess, and leaders will come and go. I mean, you see now in Europe, you see Macron. I mean, his days are counted. Obviously, they've been for a long time. You see Starmer again; his days are counted, and Germany might last a bit longer. But this is Trump is now still on a high, but that's because the U.S. stock market is still up, and the banking system hasn't failed. But it will do. It will come. And I think there's a high risk that Trump will be regarded as one of the worst presidents in history, not because of his actions, but because he happened to be born at the wrong time and elected at the wrong time. And therefore, the U.S. economy will be in a total mess. Remember, there's the most indebted nation in the world. And they are deficits. They have deficits that are going up exponentially, and absolutely there is no chance of stopping that trend. And therefore there will be, if governments or central banks, they never call it a default, of course. They will just print more money, but the US and the US dollar is now telling us that they're not going to be able to print money or treasury bonds or bills that people will buy, certainly not at normal prices. So that's why interest rates, if you want to sell a horrible instrument to somebody, then they will have to pay a very high price for it, whether that's 15% to 20% interest rate or more. At some point, they will not touch it, but until then, the rates will be much higher, and that will affect the world. So and then of course, governments at some point also. This is again, I said in this article, the dark years are here, and I 2009, and I've repeated it many times. Governments will not be able to help the people. So the whole of the social security system and the pension system have a very high risk of failing. Or if it doesn't fail, it will just be with more and more printed fiat money that has no effect really, or is worth less and less by the day. The medical system and medical care, hospitals, etc., will also have problems financially, and so that service will be getting worse gradually over the next few years. Also, it's already in most countries that I'm aware of already, especially in Europe, it's already failing there. The care, it's not what it was, and in the US it costs an absolute fortune, and it's 20% of GDP, whatever it is, which is absolutely crazy. So what I'm saying is, it's going to happen in various sectors at slightly different times, but the trend will be clear. Everything will get worse, and there'll be shortages of goods, there'll be shortages of food, etc. Also, and distribution system will not function in the same way. I'm not the prophet of doom and gloom. I'm just someone who, throughout my life, I tried to understand risk and what the best way is to protect yourself against risk. Therefore, for the ones who have a bit of money, you don't have a lot of money. You protect yourself. I'm talking about financially now. There are other ways to protect yourself, but financially, that is, of course, with physical gold and silver. And you don't have to be rich. You can buy an ounce of silver for a bit over $50. And that will probably be worth many times that in fiat currencies before this era is over. And so therefore, it's going to protect your money much better than if you have it in your pocket or in the bank. So this is what people should think of now, protecting themselves, helping the family, and to whatever extent you can, don't buy that coffee for $5 or $7. Instead, save 10 of those, and you buy an ounce of silver. But we got to hurry up because silver is not going to be found at these prices for very long. There's a massive shortage, as we know, of silver, and that's going to continue.
Before we come to silver, I do have one last question before we get to it. It's just overall the trend accelerating, because we have the banks now jumping onto the bandwagon, or on the hype train, let's call it that for lack of a better term, with Morgan Stanley saying, well, maybe you should consider owning 60% stocks, 20% in bonds, and 20% in gold. Is that just accelerating the trend? Is that making the clock tick faster?
Yeah, it's quite amazing. Here we have been telling investors to, I've been standing on the soapbox for 25 years, basically saying buy silver, and I've been silver and gold. I've been very unsuccessful because the world is still not from our company's point of view, because our clients and investors are mainly wealth preservationists, so they actually understand gold and silver, but they are a minority. That most people have stayed in the stock market, in the property market, in the private equity market, and they think in dollar terms they're doing so well, and nobody's thought about gold. All of a sudden, a major bank says from nothing, buy 20% gold. That is just, it's such a turnaround, it's unbelievable. So banks are now, if you want, panicking, and realize that they've actually been totally wrong for all these years, and now they're advising, or every bank now is advising clients to hold 10 or 20% of gold from nothing. And you can imagine, Kai, what effect this has on the gold and silver markets. There ain't that much gold around, and silver, there's virtually nothing available. And the gold market has, year after year, produced 3,000 new tons of new gold every year, 3,000 tons, just over. And that's been absorbed in normal times by the market, without anybody rushing to buy gold, and with only 0.5% of world financial assets into gold. And it's still been absorbed every month. Now, all of a sudden, investment managers are talking about a 20% of gold. The BRICS countries are buying as much as they can. Central banks in the East, because the West still haven't understood what's happening. The central banks, they only print debt. They don't understand that they should own gold. And they haven't increased their holding, except for maybe Poland or a few countries. But in general, no Western country has increased their holding of gold. Or no central bank Western, in the Western country. But China is buying, India's of course buying, all the Eastern countries are buying, Russia's buying, and as I said, all the BRICS countries are buying gold, and now institutions are starting to buy, and also, as I said, the Western financial world advisors, etc., money managers are recommending gold, which is, of course, hasn't happened for as long as I've been in this market. So the demand is massive, and there just isn't enough gold to supply this demand. So the only way that this major increase in demand from 0.5% up to 20%, that gold doesn't exist at that price. So the only way to satisfy that high demand is at much higher prices. And this is what we're going to see. And this I've been saying for quite a long time now, the last few years. I've said that gold is going to go up by multiples.
Egon, allow me one last question, because we have about 60 seconds left here, because I want to talk silver real quick. Yeah. Is it the same as gold, really? And is it catching up to gold here now?
No, as people say, silver is gold on steroids. We're going to see silver going up by at least twice as fast, maybe faster, as gold. I'm not one for forecast, but I said several years ago that gold. I expect gold already. I did 20 years ago to go to 10,000, because that's a figure it would reach at least. And if we get down to the old ratio of 15, which is the historical ratio of gold to silver, that gives you 666 silver. It's not a forecast, but I would say that it's $666 silver. It's not a forecast, but I would say it's very, very likely it happens. Remember that it's fiat money. We don't know what the money's worth. But, if you have compared to holding paper money, this is a much better way. Silver will go up faster. It will be more volatile. It's not for widows and orphans, but have mainly gold, physical, and have some silver. That's what we recommend to people.
Fantastic. Egon, what a wonderful conversation. Can't wait to see you in person in Zurich here in a few short weeks. Really looking forward to that. In the meantime, where can we send our audience to find more of your work and to follow you?
So the easiest way is our company is called von Greyerz .gold, but easiest is to put in just vg.gold. Also gold, our old names, and we use still goldswitzerland.com. goldswitzerland.com or vg.gold. That's the easiest.
Fantastic. Awesome. Egon, thank you so much for joining us. It's always a pleasure to catch up with you. It's good to see you again. And to everybody else, thank you so much for tuning in. Really appreciate you watching. If you haven't done so, hit that like and subscribe button. Also, leave a comment. How are you playing the current scenario? What is your price target for gold and silver right now? Of course, we're being cautious about targets, but momentum is so strong right now. We need to keep that in mind. And maybe what are you thinking is really driving gold and silver as well? Is it just really the collapse of fiat, or is there more to it? Really curious to hear from you as well. Thank you so much for tuning in, and take care out there.